So hello guys, welcome to a new video. Sorry for the late update, but I was in my job and I entered a position on Euro USD, and as you can see it's already halfway to my TP. That's my first trade on my FTMO account and the first trade of the week. Still need a couple pips, 8 pips to hit my TP. And as you can see here on my MetaTrader FTMO server 4, we might take profit in couple minutes. So we saw a retracement, we saw here a double bottom and a sweep of liquidity of London. Before that we got a beautiful candle, beautiful 4-hour candle confirming that there is a volume in the market. So as you can see, this is a beautiful candle. Some people will be afraid of this candle. Some people will sell after this candle. Why? Since this candle swept the liquidity here, but it doesn't matter. You see the candle closure? It doesn't make sense if a candle closes like that to enter a sell or just to wait. If the candle closes like that, it's a confirmation that there's a lot of buyers in the market, there's volume in the market, and there's decision. When you see this kind of push, all your attention will be on buying. We get the retracement, we get the lows of London swept out, we saw a double bottom on the 5-minute time frame, we saw a market structure shift. I like to use line chart. We saw a market structure shift on the 15 minutes. So as you can see, that's here the lower low of the 15 minute, and then we see attempt for higher low, and then we see a lower low, and then we see the shift. So that's the shift plus a double bottom on the 15-minute time frame. So double bottom plus a shift in structure, and yeah, that's our confirmation. And we're targeting the liquidity here, the closest liquidity area. So the price can go till here, the price can go easily till here, but we don't care. We don't care about what the price will do. We care about where is the closest liquidity pool here. So we're targeting this liquidity pool. The more you hold the trade, the probability of it to lose is higher. So we entered this trade after this closure 1 hour 15 minutes ago. I will move my stop loss to break even. Since we created this structure, on the 5-minute time frame, plus on the 15-minute time frame we got this structure. So I'm gonna move my stop loss to break even, and this trade is now a safe trade. It's a risk-free trade. So usually I don't move it randomly to break even, because for this trade to get back to my break even and take me out and go to my take profit after it's already so close to hit my TP, after it's already too close for this liquidity pool area. Price moves from a liquidity area to another. So now why the price will go down and hit my stop loss and get back up to this area? Like, it doesn't make sense. And if price want to go down right now, I'm 80% wrong. So I want to remove the risk from the table ASAP. When I see the structure, I saw this structure, I saw the price struggled to break this here, and I saw a lot of consolidation here. So the probability for the price to go down here and take this level out and go up, it's high, it's possible. But the probability for the price to go directly down here to this area is low. And if the price want to go down, most probably I'm wrong. I don't want to lose a trade after being up 1-to-1. Next 15-minute candle, I want it to close bullish. So let's see. I like the fact that this structure closed above this here. This candle closed above this here. So let's wait for this 15-minute candle. I need it bullish. I need it bullish. One trade a day. We don't want to mess up. We don't want to mess up, guys. One trade a day, 1% risk, 1-to-1. That's it. That's all you want. That's my mantra. One trade a day, one trade a day. Even if it's a loser, we want to take only planned trades. We only want trades that make sense. And this trade for me, it made sense. That's why I took it. And as you can see on my FTMO, that's my first trade. As you can see the history, that's the first trade of the week. First trade of the week and first trade on this account. I like this candle. I like the volume. I like the volume. Volume is everything in the market. You must know when is the volume coming, where is the volume, when you enter. It's all timing. It's all timing. Like yesterday, I didn't enter this market because look what the price was doing yesterday. Look at this consolidation. Look at the bad price action, and that's only on the 5-minute time frame. Look at the 4-hour time frame. This 4-hour time frame volume is so bad. Up, down, wicks, up, down. We don't trade this. We want to trade volume. The price was consolidating here, okay? The whole yesterday, the whole Monday was consolidation. And then today, in London session, timing, focus on this word, the timing. In London session, we saw a huge break. 3 very, very, very bullish candles. So what is the probability of this trade or this volume to continue? Because it's obvious, the volume is obvious. So it's bullish volume. When we saw the closure of the 4-hour candle, it was obvious that it's buys. So we remove the selling bias, we remove everything, we just focus on buys. So on the 15-minute time frame, we can see the big candles. Look at this candle. It ate all of this consolidation. Look at this candle. Look at this candle. Big candles. They are big bullish candles. Some people, after seeing this huge push on USD, they are looking for shorts. But I'm not doing that. I'm trading with the trend. I'm trading with the volume. I'm trading with the majority of people. If you want to know the market bias, just go to the sentiment, go my FX book, and you will see. EUR/USD, 84% of people are shorting, 16% of people are longing, 33% of traders are currently trading EUR/USD. So, majority of retail traders are shorting EUR/USD, 84% of short traders. If I see longs everywhere. I see huge 4-hour candles. I see huge daily buying candles. 1% risk always. 1%. Risk management is what gonna make you a good trader. I suffered a lot. I burned accounts just because of risk management. I suffered a lot. Risk management, if you're risking more on some trades because your opinion is that this trade is guaranteed, you will lose and you will burn accounts after accounts. I don't know why this didn't hit my TP. Man, look, even half a pip, even less than half pip. It's literally less than half a pip. There's liquidity up. Most probably the price will take it out. Most probably. It's okay, no worries. Let's trust the process. Let's trust the process. We are about to hit our TP. So, what is the lesson? The lesson is stick to the process. Trust your analysis. Trust your process, guys. Trust it. Trust it. Trust it. Trust it. It must hit your TP. Don't give up your profits for emotions. That's what the market wants you to do. The market wants you to fall for your emotions. The market wants you to be slave to your impulse. So guys, that's the lesson for today. Trust. You need to trust your analysis. You need to trust the process. Be confident about the setups you take. Confidence is the key in trading. If you're not confident about something, don't do it. I waited yesterday the whole day. I didn't receive any setup on 2 pairs. And today, I received one. I was confident about it. Trust yourself, because if you're doubting yourself, That's dangerous. That's dangerous. And that's not in trading only. That's in everything. If you're doubting yourself in life, you will not achieve anything because you lack self-belief. So guys, let me end the video here. I need to go to the gym. Stay hard and see you in the next one.